Welcome to the channel. Here, we provide clear, actionable insights into the complex world of tax and accounting to help your business thrive.
Hey there, let's talk about something that can be, well, pretty stressful, dealing with tax debt. But hang on, because there's actually some good news. We're going to walk through something called the IRS Simple Payment Plan. It's designed to be a clear path forward and, make things a whole lot more manageable.
So you owe money to the IRS. Just seeing that notice in the mail, yeah, it can be really daunting. It's one of those things that can make your stomach drop. I mean, nobody wants to be in that situation, and it's so easy to feel totally overwhelmed and just not know what to do next.
But what if I told you there's a built-in, manageable way to handle it without a giant mountain of paperwork? Well, that's exactly what we're digging into today. The IRS actually has a specific option that's designed to be super straightforward for most people who are facing this exact problem.
All right, so what is this thing, really? Let's get into it. We're going to break down what the IRS calls a simple payment plan and figure out if it could be the right move for you.
Okay, at its heart, it's pretty much exactly what it sounds like. It's a long-term agreement that lets you pay off what you owe over time instead of in one big, scary lump sum. Think of it as a formal, official arrangement that's just designed to make the whole thing a lot less stressful.
And here's why they call it simple. It's all about what you don't have to do. You get to skip the really complex financial statements, which, believe me, can be a huge headache. There's no lien determination, where the government can claim a right to your property. And for businesses, you don't have to go through a trust fund recovery penalty review. It basically strips away some of the most intimidating parts of the whole process.
All right, that all sounds pretty good, right? But the million-dollar question is, do you qualify? Let's check out the eligibility rules, because this is where you'll figure out if this path is actually an option for you.
Okay, so for individuals, the magic number is $50,000. Your total bill, and that includes all the taxes, penalties, and interest, has to be 50 grand or less. That same limit, by the way, applies to most businesses. Now, there's one little exception. Businesses with what are called trust fund taxes, like withheld income and payroll taxes. For them, the limit is a bit lower at $25,000. So those dollar amounts, that's your first big checkpoint.
But it's not just about the money. There is one crucial, absolutely essential rule for everybody. Before you can even apply, you have to be all caught up on filing your tax returns. Seriously, being current on your filings is completely non-negotiable. You got to do that first.
But check this out. This is fantastic news and should make you feel a lot better. The IRS itself says that over 90%, more than 90% of individual taxpayers who owe money actually qualify for this plan. So the odds are really, really in your favor that this is a real option for you. Okay, so let's say you've checked the boxes. It looks like you qualify. Now what? The next step is actually applying. Let's walk through the 3 main ways you can get this thing set up.
The IRS gives you 3 pretty clear paths. First up, online. This is usually the easiest way for individuals. You just sign into your IRS account and get it done right there. Option 2, you can just call them. The phone number you need is usually right there on the notice they sent you. And finally, option 3, you can do it in person by visiting a local taxpayer assistance center or TAC. So you've got choices depending on what works best for you.
So now you know how to apply, but hold on. Before you jump in, it's really important to understand the details of the agreement. Let's cover the fine print, so you can make a decision you feel good about.
And this right here is a really key decision you'll need to make. How long do you want the plan to be? You can usually take up to 10 years to pay it all off. Now, if you stretch it out over a longer time, your monthly payments will be lower, which can be a lifesaver. But, and this is the big trade-off, you'll end up paying more in interest over the years. On the flip side, a shorter plan means higher payments each month, but you'll save a bunch of money on interest. It really comes down to what's more important for your budget right now.
The good news is that when it comes to how you actually pay, they're super flexible. A lot of people choose automatic withdrawals from their bank account. And hey, if you do that, you can often get a reduced setup fee, which is nice. But you can also just make a payment each month using IRS Direct Pay or use a debit or credit card, a digital wallet. You can even pay with cash through certain approved partners. So yeah, you've got plenty of options.
And what if you've gone through all this and you're thinking, shoot, I don't think I qualify? Hey, don't panic. The IRS is really clear about this. There are other types of payment plans available if this one isn't the right fit. The Simple Plan is just, the most streamlined and straightforward one they offer.
So, there you have it. We've broken down the what, the who, and the how of the IRS Simple Payment Plan.
It's really designed to be an accessible off-ramp from all that tax debt stress for millions of people. So the only real question left is, now that you know all this, is taking this step the right move for you?